Alrighty, everybody. This segment is extremely important. Silver is at an all-time high, not just over the past few decades, but an all-time high. It hit that just yesterday. Today, we're going to be speaking about a few things with Dr. Kirk Elliott himself, the expert in the industry. When it comes to understanding lease rates and what that actually means, we'll explain that shortly. The fact that London has actually run out of silver, demand is very, very high. That, of course, will impact the price in a very positive way for those who hold silver as an investment. And India as a country is gobbling up silver like it's nobody's business. So, with that, Kirk, I know you have a very busy day. We don't have too much time. I want to dive right in into what's going on. Just yesterday, silver hit 52.50 overnight. Now it pulled back to 49. I expected to always see that, but still, 49 is also close to an all-time high, and just a few hours ago it was at 52.50. What can you tell us? What do we need to know? And of course, anybody who wants to invest and take advantage of this opportunity, use the link in the description below to book a call with Kirk Elliott's team. But please, Kirk, take it away. Let us know what we
So,
need.
okay, so I've got to correct you on something because you're right in the sense of silver hit 52.50, right? That's actually like if you look at CNBC or other like news feeds, that's the price that they show. That's
Okay.
the next futures month contract price. Spot price is current. It's in something called backwardation right now. Literally, um, 817 Mountain. Spot price is 54.74.
Right now?
Mhm. Well, it pulled back 61 cents, right? But yes, it was over $54 this morning. So what is the difference? This is very important to everybody watching, right? So has to do with London, has to do with lease rates, has to do with supply. When you look online, unless you're our website, we post spot price, and spot price actually came down this morning. For some reason, somebody's shorting it. Maybe some supply came in, but we're still at like $52, right? So, which is well beyond the all-time high. But why is there the difference between the futures month, which is not like far into the future, it's like next month, and the spot price? Normally, those are within cents of each other.
Yeah.
Now it's literally a $2.50, $3 spread differential. It's insane.
That's
So
what backwardation means.
that's what backwardation means, because the reason futures prices are higher than spot prices is because there's a carrying cost. There's a cost of financing. There's a cost of storage. There's the expectation that prices are going to go up, right? So you always have this future price that's higher than spot price. Now,
Mhm.
just because the future price is lower than spot, that doesn't mean that they think the silver price is going to go down. The carrying costs are what they're dealing with right now. So London, all roads lead to London. They always have. It's like London is the financial capital of the world. It's the storage capital of the world with LBMA, the London Bullion Market Association, right? They store all the metals for like central banks and countries. And everything goes through London. Even if you're buying stuff here from our depositories, right? They ship it to London. London then actually gets it to the different refiners, suppliers, all the small people that make up the LBMA that aren't necessarily small, but all these parts of it that can actually take the raw material, the raw silver, and convert it into whatever it needs to be converted into. I mean, this is why it goes through London. London has the most vast network array of all these different refineries, right? So if you're in China, you don't want 100-ounce bars. You're buying stuff in grams, like
Yeah.
you would or kilos in Europe. And in America, we want 1,000-ounce bars, 100-ounce bars, right? It's just different, right? So now everything goes through London. The free float is the amount of silver that's actually available for people to buy. Like, so if you and I have metals that are stored at the depository, for example, it's at the depository, but it's not available for sale. We own it. It's allocated to us. The free float is everything outside of that like refineries would have stored to sell. Like I mean, we're a big company, right? And when like our depository exchange relationship is like, okay, they better have ounces for us every single day when we make trades, right? So they've got this stuff in storage.
Mhm.
Now that's a lease rate that they have to pay for that storage, right? It's called in repo, which means yeah, they're just holding it for people like me to buy it so we can sell it to our clients, right? Normally that rate is around 10%, maybe 9% per
Okay.
year,
Per year.
right? So if they're only holding it for a few days, that's a really dinky amount, right? So on Thursday of last week, that jumped from like 9% to like 26 point something percent.
Who raises that?
The banks.
Okay.
It's banks that lend out money, right? So they're the ones giving this lease rate. Now, on Friday, it went to 100%.
Whoa.
100% a year. So that means if gold, I mean, sorry, not gold, if silver is $52 an ounce, it's 100% to finance it for a year. Take that $52 divided by 365. It costs them 15 cents per day per ounce to store things.
Crazy.
Like, let's just say, somebody is storing 500,000 ounces. Which, I mean, we go through that in a day sometimes, right? I mean, that doesn't sound like a lot, but that's just one company in the world. So 500,000 ounces times 15 cents. I mean, you're talking $75,000 a day in financing costs for them holding it. So all of these refineries, all of these dealers, they're taking their inventories flat, meaning they don't want to hold an inventory. They
So
don't want
so
to have a cost.
how does it impact price?
Well, refineries are not going to produce.
Because they
Why
can't
would
afford to produce.
why would you produce something for somebody to buy if it's going to have to be stored for a bit and they're going to lose money? See, refineries operate on about a 2 to 3 cent margin per ounce. If it's costing 15 cents per ounce per day in a lease rate, they're losing 5 times in one day what their profit is per ounce. Let's say they had to store that for a week before somebody like me would buy it from them. I
Yeah.
mean, they go bankrupt so quick, so that they don't want to have pre-production. So
So
it's
now,
not
so
there.
now, from what I understand, if there's less production, there's less supply, more demand, and that
Mhm.
increases the price.
Yes. Yes. So then it begs the question, why do the lease rates go up to begin with? Why do the banks raise these stinking lease rates? So imagine you're buying a house, right? And you have a stinky credit score. Your FICO score is awful. It's like 510, right? So, okay. What is your mortgage rate going to be? It's going to be pretty high versus somebody who has an 800 credit score, right? Why? Because of the risk. So the higher lease rate says banks think that lending is going to be a huge risk. So number one, why is this? So been thinking a lot about this, right? And it could be a multitude of reasons, but number one, we've talked a lot about how China, India are acquiring silver. We've
Yeah.
talked a lot over the months about how silver is leaving London and came to New York. So did gold, right? It's been moving over. Well, this is a problem now, right? Because now London has no silver. And this is a classic short squeeze, right? So if banks have a 100% lease rate, they're not capitalizing hedging, right? So these people that have short positions need to borrow to actually buy the metals to actually fulfill their short positions. Well, there is no metal available. London ran out, and the lease rates are 100%. I mean, you've got trading department, trade desks that are highly leveraged that will possibly go out of business. I mean, this is severe. So why did they have to raise the lease rates? Number one, they don't think they don't know about the uncertainty of Trump's tariffs for number one.
Okay.
Like, because if so, COMEX, China, India, they all have supply, right? They've been buying it. So why don't they just give it back to London if London's run out? And so there's a massive arbitrage opportunity, right? You can buy silver in China, India, or COMEX, and what the futures contract price is $2.50, $3 less than London spot. So you could buy it in one of those countries, sell it to London, automatically arbitrage, you're making $2 to $3 an ounce.
I understand.
So why wouldn't they do that? Because they know that London is squeezed. They have a huge problem and they're thinking, ooh, tomorrow they're going to be offering even more. The next day they might offer even more. See, the fact that London is raising.
So one
this,
second on a short squeeze like that with what you're saying, there could be a point, correct me if I'm wrong, that they do end up giving it back to London. Wouldn't we see a big drop in silver at that point?
not a huge drop because we still have all the industrial demand, Sony, Samsung, LG, solar power, right? The demand is through the roof, but you could see a couple dollar drop. Absolutely. Because there's going to be more supply. It's just supply and demand. But
Right.
there's so many moving parts to this, right? So these countries or exchanges like COMEX, the basically Shanghai Gold Exchange that own the silver, they're waiting for London to actually raise prices even more. See, London is raising their offer price because they need metals now. This is backwardation. They don't care about a month from now. They need it now to fulfill delivery because they've run out. So this is why, the price that you're seeing for futures prices is like 51 and silver spot was actually 54. It's because London's offering a bunch. So tomorrow, maybe they're going to offer 55. Maybe they're going to offer 58. They will keep raising their offer so they don't default on deliveries. So maybe these countries are just waiting because they know that London is getting squeezed.
How long can this last for? And what do you think silver can hit by the time it ends?
I mean, it could last a long time. It could last for months. It could end tomorrow. Right? So ultimately the holders are going to say, "Okay, I'm happy with the arbitrage opportunity." Right? But so then they sell into it. I think that's probably going to be at $4 an ounce. And then India will start selling back to LBM. I mean, they have hundreds of millions of ounces. Okay, at $4 an ounce, that's a large profit. This might put LBMA out of business though. And this is where maybe the BRICS nations hold on for a while because it's not about making money. It's about changing the source of power in the sense of let's get control away from London and from the West. We want to control the supply of silver and gold to the world. So let's squeeze London out of business. They have to get offer prices so high that they can't afford it, right? And now Shanghai is the center of the financial universe, or COMEX is, right? So you've got that kind of stuff going on. But now, remember how I started. All roads lead to London.
Yep.
You have to deliver to London and then it comes back. So all this silver that came to New York, for example, if they fund London and they put it back over there, and then on the 19th of this month, Trump's tariffs happen to include silver.
Yeah, what happens with that?
Well, then depending on what the tariff is, let's say it's 50%, then it's going to cost them 50% more. If silver's $50, it's going to cost them 75 to
So
bring it back.
are the tariffs definitely happening?
Tariffs are happening. We don't know what's going to be excluded. Right? It's Regulation 232 is talking about rare earth materials and strategic metals and what's included and what's not. See, steel and aluminum were included in that list because it's needed for national security and stuff. So are they going to include silver or not? We don't know. We're waiting until the 19th.
Have they included silver in the past with things like this?
They did, and then they reversed it. Right? There was ultimately tariffs on Mexico and Canada for their silver. And they kind of conceded and took it away. But just a couple of days ago, the Secretary of the Interior said, no holds barred. The extraordinary actions by China withholding the world of rare earth and strategic metals is going to take extraordinary actions to fight them. What do those words mean? extraordinary actions. What are they going to include? See, and I've had clients that have called and said, Kirk, doesn't Trump care about the price of gold and silver? It's like, no, he doesn't care what it is. He doesn't care if it's high or low. He wants to control the source of it to bring power back to America, right? So we don't know how this is going to play out, but that uncertainty is causing the banks to say, there's enough uncertainty here where we're going to have to jack up these lease rates, right? And so this is the weird pickle we have. Now, if tariffs are including silver, silver probably hits $60 in a matter of days.
Crazy.
If they don't, if it's excluded, you still are going to see higher prices. Maybe it corrects a couple bucks because it's like gone up so fast, but it's going to continue to go up.
Well, what about the
Because why?
fact, what about the fact that we passed 50? So I understand that 50 was like the psychological point.
It
And
was.
it's weird that the markets work that way, but they do. So what does that mean? Like, how likely is it to stay above 50 or break through there again and go back down?
Very likely it stays above it because it's not like we went to $50.03 for a day.
Yes, correct.
We
It went to
blew up to
51, 52.
54,
Yeah.
54, right? And even after the correction this morning, which is it's down 50 cents, right? We're still at like 52. So here's why it's going to stay up and be more sticky in that price range. Because of the lease rates, the refineries aren't manufacturing product right now. There's a 4-week backlog. India had to suspend all silver ETF purchase selling. People in India can't buy silver ETFs anymore. Why? Because London has run out. There's no
Right.
way to fund it, right? So now there's this clamoring, and in America with silver hitting these massive highs, people are starting to move from gold to silver on the retail sector, and you've got the silver ETF, which the demand for that is through the ceiling, right? So you've got this ETF demand. The India demand outside of ETFs is just jewelry demand. It's a seasonal time of their year. Happened to hit at the worst possible time because London ran out. So anyways, with the lease rates, the refiners aren't making product. But does that mean that Sony, Samsung, Boeing, Lockheed Martin, all these companies, does it mean, oh, they're not selling TVs anymore?
They're just
No,
going to have to pay more.
the demand is still there. But so now there's this backlog that's being created. They're still requiring silver, but the refineries aren't producing it because of the carrying costs. So now, once we get back to normal, it's going to take a while to recover that backlog before you start to get inventories again. All this time, silver is going up in price and the ETF demand is increasing. Even a few weeks of backlog is going to be almost an insurmountable task to overcome. So yeah, I think the price continues to go up. Now you add to that above 40, 48.70, which was the old high.
Yep.
And then you have the artificial high from 1980, which the Hunt brothers, a speculative blow off, that was like 49.45. Okay, I don't consider that one real, right? That was two guys cornering the market. That doesn't happen very often, like ever. So that one, that's not a real price to me. The 48.70 in 2011 was a real price. That was normal supply and demand forces. But it doesn't matter. If we use the Hunt brothers fake number, we use the real number for supply and demand, we eclipsed both of them. We blew past both of them. And then we hit the psychological factor of 50. So now, from a technical standpoint, absolutely no resistance points anymore. There's no algorithms, there's no Bollinger Bands, there's no technical trading that's put in automatic sell orders when you hit a resistance point and old highs. They're gone. So that means there's very little resistance. And I talked about this on our last show. Once we surpass that, you're going to see $2 and $3 move days in a day. Well, yeah, we did that yesterday.
Yeah.
Yesterday, silver was up 4.5% in a day. I mean, so the best is still yet to come, right? These kind of things simply don't happen. I've never seen London run out of silver ever, and yet it now happened. So the things that we're talking about completely uncharted, but just because there's no supply doesn't mean that the world no longer has demand for TVs and solar panels and electric vehicles and batteries and missiles and torpedoes and everything else. The demand is still there.
I,
There's
I
just no
want to
supply.
I want to use this time to sort of dive deeper into something that we spoke about in the past as we sum this up, because this is a perfect example of what you've been trying to say and why I say I think Kirk's team is the best, not only in terms of what they do, but also the model that they follow. So right now there are silver future prices, which are around 49 something, and then there's silver spot prices, which are around 52, let's say. Let's
Mhm.
say somebody decided right now, Kirk, I want to sell some of my silver. Do they sell at the spot price?
Yeah, they're not going to sell at a futures price. That's a
Okay.
paper contract price.
Okay. So the reason why I bring that up is unlike most other firms or companies of this type in the world when it comes to what Kirk does, generally you're going to go, and this is now a perfect real life example, you'll buy X amount of silver and you'll pay X%, let's say whatever, X%. And now 3 years later, you made 100% or 200% on that silver, and you're going to sell again. But now, when you sell, they're charging you a percent as well. And let's just assume that it's 3% and 3%. Let's just make that number. What is the number across the board, Kirk, for companies that work on that model?
It's all over the place.
It's all over.
I mean, I just got an invoice from a client who bought from a competitive firm, and
Yep.
they just called because they didn't know. Literally, they didn't know. They've never bought gold and silver before, but it was like a $300,000 portfolio, and they said, "Hey, Kirk, I'm trying to sell this back to him. Is 28% commission when you sell high?" It's like,
Oh my
what?
God.
Yeah, it's like
Okay.
through the
So
roof. We charge zero,
yeah, that's
and
that's
so
what I'm trying to
and
get to.
and they paid literally double the spot price when they purchased the stuff. So it's like, okay, basically massive amounts up front, 28% liquidating. Here's where it gets dangerous, Jason. Um, I've had three companies that the clients have called and said, Kirk, they're not buying any silver or gold back right now. They won't even buy our stuff back. And so this is because they don't have. I'm just blessed. We're a very busy company. We can't get the phone to stop ringing, right? It's just amazing. We always have we always have buyers, way more than sellers. Some of these companies that operate out of their own inventory, like they trade out of their own inventory. They don't have enough purchases to offset the liquidations coming in. They're undercapitalized. They will go out of business, right? They just can't do it. Now, we don't have an inventory. We deal directly with the depository, right? So we never have that issue. Now, there is an issue right now in the industry where that bid ask spread is wider right now than normal. Why? Because when you have the lease rates, these depositories, they don't want to have excess inventory. They don't want it right now because the cost of carrying is so much. So while these lease rates are 100%, that bid ask spread is probably a couple percent wider than historically it has been. This is a
Gotcha.
temporary thing. As soon as lease rates come back to normal, which means London is getting the supply that they need, they're back to normal. We don't charge anything. But this is a weird time right now where even though the demand for silver is through the roof and everybody needs it, nobody wants to take it on because the cost of holding it is so expensive. It is the weirdest catch 22 ever.
Yeah.
But
Yeah.
the point is, don't ever buy something where you're going to have a stinking 28% commission
That's
when you liquidate.
crazy.
I mean, the average historically has been about 4 to 6%.
Yeah, so let's assume 4% on both sides. So you're paying 4 when you get it. you're going to pay 4 when you sell, but when you sell, that 4 is really worth a whole lot more than if you paid 8 in the very beginning on a lower amount. So Kirk works in the opposite way, which I like better. And that's why I promote everything he does, because I think it's a great opportunity. You're only paying a commission when you buy on your purchase price. When you sell, if you were to call today, say, I want to sell my silver, there is no commission on that sale. And that spread is huge in terms of what you're getting out of it by not going with somebody else that's charging you any percent
Yeah.
on the exit. Because that exit, especially in this case, we started speaking when silver was 18, now it's 52. That's crazy numbers. That's
I mean,
almost 3.
yeah, it's almost 3, right? So let's use your math, right? So let's say 4 and 4. 4% when you go in, and we'll just use it was 100,000. Let's say it was $100,000 investment because it's easy math. Okay, so that's 4,000 when you sold it. If the price of the metal didn't change at all, it's still 100,000. It's 4,000 when you liquidate it. That's 8,000. So in that sense, it's the same as 8% with us and 0 when you liquidate.
Yes.
Right? But nobody invests in anything to actually have it stay the same. In your case, we started doing stuff when it was 18. So you've tripled. So let's just say, use the math in those numbers. 100,000 turns into 300,000.
Yep.
4,000 up front, but what's 4% of 300,000? That's another 12. So that cost you 16,000 to buy and sell that because the price of the metal went up, even if you had a 4% commission on the back end. I don't care if your 100,000 turns into $1 million. 0 is 0. Right?
That's the right way to do it. I like it a lot.
Yeah, it's incredible.
So that's one of the reasons among many that I always do these shows as well with Kirk specifically. There are a lot of people out there that do this, but this is a great model and it works and they know what they're doing and the proof is in the pudding because ever since we started these shows up until today, 300% increase. So everything long-term, big picture that Kirk has shared with us so far has been correct. One can say, well, we wanted silver to hit, 50 6 months ago. That's great. Nobody's perfect. Nobody's God. Nobody's a prophet. It's there right now. And it's gone to incredible places. And again, I only share what I do myself with the people I do them with. And Kirk is one of those individuals. So again, if you want to book a call, I know Kirk has about 200 phone calls today that he has to get to before new calls that are going to come in today. But make sure to fill out the form in the description below this video. They will reach out to you as soon as possible. Take action. And again, it's a free consultation. I'm sure most of you do want to move forward at this point because you see what's happening, but ask your questions, see what you can learn, and take action. Don't be afraid. Don't be fearful. When you take action, you actually see things happen. So with that, Kirk, thank you for the guidance. You've blessed a whole lot of us in many ways, and I look forward to our next show, seeing it closer to 60.
We'll see you soon. It's an exciting journey, and we get to do it together.
Yes, thank you.
Subscribe.